Longtime fans of the show should be familiar with the lender formerly known as Sue Pullen, and I'm pleased to announce that she's back, fresh off a rebrand and ready to help as Sue Mackey. Sue is a certified mortgage advisor at Fairway Independent Mortgage, an equal housing lender who focuses on finding the right product for you and your needs. She has over 20 years of experience helping thousands of homeowners. Whether it's purchasing, refinancing, or even a reverse mortgage, Sue will help. Sue's licensed in 36 states now, so reach out and let Sue Mackey it happen for you. The best way to reach her is just give her a call at 520-977-7904 or in an email, spullen@fairwaymc.com. Fairway Independent Mortgage has an MLS number of 2289. Sue Mackey has an MLS number of 206048. That email again, spullen@fairwaymc.com, and that phone number is 520-977-7904. Shoot Sue an email and let her know she needs to update that address.
You are listening to an entertainment program put together by a company called Financial Ineptitude. Anything said on this show is not an endorsement or professional advice. Would you really want to tell a court of law you were suing us because you thought taking financial advice from two idiots on a podcast put out by Financial Ineptitude was a good idea? Really? Clown hat, smiley face.
Well, hello everybody and welcome back to the China Shop. Returning to the shop today is the distinguished and driven Dan Habib from MBS Highway. If you'd like to learn more about today's guest, make sure you check out his website at highway.ai, or you can check out MBS's podcast On the Highway.
Yeah, Kyle, a couple other
Yes, sir.
things is, my Instagram, which I post a lot of videos on, is the Dan Habib. And
Yep.
because today we're talking about crypto, Highway is certainly, the main company that I work with, but I have another company called Crypto Charged, and it's just cryptocharged.com. And that is a service similar to Highway, but what we do is we educate potential crypto investors on the crypto market every single day. Live videos, technical analysis, on-chain analysis. We have some really cool stuff on the site, like a coin glossary that helps you really understand everything you need to know about potential coins that you want to invest in. So really a crypto-specific service, even has some, potential leveraged plays and stuff if you want to be a little bit risky and on this period of really boring trading, overall, try to potentially make some dollars. So.
Oh, that's awesome. Okay, so that's cryptocharge.com. Make sure you check that one out.
It is, and if you go there, you can sign up for like a 2-week trial, for free. But you also, if you wanted to put in the code, my last name Habib, you can sign up for 50% off that I set up for this call.
Oh, that's amazing. Okay, I'll make sure that we got links for all that in the episode description. If you want to reach out with any suggestions or corrections or questions for future guests, you can do that via email at twobulls@financialineptitude, or you can join our free Discord server where we gather to share our struggles and lessons learned with other like-minded market aficionados. Now that we got the business stuff out of the way, let's just kind of jump in. So why crypto? Like, why did you get what attracted you to that space?
Well,
and how long have you been trading it?
Really since around like 2020. So, not an ultra long period of time, but in the crypto market, it certainly feels like longer than that.
Yeah.
with the ups and downs, and I've certainly been humbled by the crypto market, as I'm sure many listeners have.
Oh, I'm sure.
But I just thought the crypto market was fascinating. I think in the United States we have some serious issues with our centralized finance system.
Mhm.
We have $34 trillion debt level. We have a government that continues to egregiously deficit spend, right? So
That's when they can agree on a budget.
right, and that's just a game where they hold out to the last minute. A lot of times it's politically induced,
Yeah.
and then they raise the debt ceiling, right? And otherwise the government shuts down, and you can't make critical payments to certain things. So there's no way that I see us without a great reset in the U.S., which certainly wouldn't be a winning ticket for a Democrat or Republican to be elected on, right? But there's no way to get out of this where, the debt level is going to just continue to grow, right?
Right.
So what does that mean? Well, it means that, you're going to continue to have these issues. You're going to, a banner year in the U.S. is 2% inflation, right? That's the Fed's goal.
Yeah.
But we've had years where we know over the last few years, we've had much, much higher inflation. And we had 40+ year high inflation.
Right.
We were up to, 9% on the headline CPI, 6.7% on the core CPI. And what that essentially means is that your dollar, the purchasing power, is being eroded. But
Mm-hmm.
even 2% is the Fed's goal, well, you're still, losing 2% of that purchasing
Yeah.
power per year there, right? And
Right. Right.
yeah, I think that Bitcoin is a very specifically Bitcoin is really the one that I really track. But I think many of them are really cool as far as some of their use cases and such for remittances, and I think the opportunity out there is endless. But let's just talk specifically about Bitcoin here. The fact
Mm-hmm.
that you have something that is completely, and really it's the only one I think is truly decentralized, where you can have a financial system without the need for the government, without the need for a Federal Reserve. You don't have somebody that can just create more of it to stimulate the economy or adjust rates.
Right.
This is something that there's a finite amount, and I'm sure many of you have heard that it's compared to something like a digital gold, right? Where gold
Right.
has
Right.
obviously stood the test of time for 5,000 years because it's expensive, and it's a natural resource. It's expensive to mine, right? You can't just create more out of thin air.
Mm-hmm.
Although it doesn't pass certain tests in a lot of cases, right? Like being divisible and things of that nature, and portable to a degree. But
Right.
cryptocurrencies, and Bitcoin specifically, certainly solves a lot of that. And obviously, there's a finite amount of 21 million. And what I really like about it is that it's really deflationary over time instead of inflationary, because in
Oh, because you're constantly cutting the supply down.
yeah, well, when it started, I mean, most people don't realize, you've heard the term miners and such, but
Yeah.
Bitcoin, it's essentially a global, transparent, a blockchain or ledger, right? That it trades on, and
Mm-hmm.
you have these miners that essentially what they are is they're ledger keepers. They are keeping the network secure. They plug in to the Bitcoin network. They use their processing power, their energy, and really, what they're doing is making sure the network is secure, verifying blocks of transactions, and to make it as simple as possible here, trying to solve a hash function first, and whoever's able to do so gets a reward. Now, that reward started
Right.
at 50 Bitcoin, and then every 4 years it gets cut in half. So right now, the reward is 6.25 Bitcoin. So if you're the first one to do this, you get that reward as the miner. But the interesting thing is that byproduct is the only way new supply comes to market. So,
Right.
right now, if you take a look, the reward 6.25 Bitcoin, the difficulty of the math equation adjusts so that on average, every 10 minutes, a new block is written to the blockchain. So if there's a lot of activity on the network,
Ah.
then the math problem and the difficulty gets higher, right? If there's not a lot,
Uh-huh.
it gets easier, so that on average, it's every 10 minutes. So you do the math, that means that it's 144 blocks. That means that there's roughly 900 Bitcoin per day currently that are coming to market. But next year, sometime probably around April, you have the next halving. So what does that mean? That means that you're going to have the reward drop from 6.25 to 3.125. That means that instead of
Mm-hmm.
900 Bitcoin coming to market on average per day, you're going to have 450. So you have an asset where the supply coming to market gets lower and lower and lower every 4 years until you reach ultimately the endpoint where there's no more Bitcoin to be mined, because right now you have over 19.5 million Bitcoin that have been mined of a final number of 21 million. So it is very much a scarce asset, probably the scarcest that we've seen. Listen, it's got its challenges. I don't think that in its current states right now, it's and tax laws, that it's really optimized for transactions to a degree, right? Because if you're
Tax
yeah,
laws. Do they actually exist yet?
well, what I mean by that is that if you're doing things the right way, I mean, I'm not going to go ahead and let's say I bought Bitcoin a few years ago. I'm not going to go ahead and buy something that's small, but have to sell my Bitcoin, and then the tax liability I
Right.
have on it is going to be greater than um,
The
the
purchase of
purchase
whatever
of
you're
what I'm
trying to
buying,
pick up.
right?
Yeah.
But I do think it's very much a commodity. I think that we're getting closer to some regulatory clarity.
Mm-hmm.
I think the XRP case was certainly a good step in the right direction. Um, but I think that there's a lot of exciting things that are happening right now for more adoption of crypto.
Well, before we jump down there, there's a couple things that I wanted to ask you about. One of them being, you mentioned the U.S. financial system is kind of needing, like, that's the weaknesses that you see in there, are kind of the things that you're looking for Bitcoin to challenge. Am I phrasing that correctly?
Yeah, I mean, I don't think I don't necessarily see a world where it replaces it.
Right,
But I
right,
think
right.
that it's a very interesting alternative. I think everybody should have some exposure to Bitcoin because it's probably, in my opinion, the best asymmetrical return you can get over the next 10 years.
Mm.
And yeah, I think it's certainly just like you want to have gold in your portfolio. I think it's something that is something everybody should have some of.
The question I wanted to ask is, are you concerned about whether or not the U.S. would fight that? Because I see Bitcoin as being like a loophole around sanctions, and that being something that maybe the U.S. or the government's not really going to want something that can limit the effectiveness of one of the greatest tools that they have at their disposal.
I don't think they have a choice. I mean, listen, there
Hmm.
even if you ban Bitcoin, I mean, China's a good case in point. It's really hard to ban something that's decentralized.
Right.
So we had that summer where you saw Bitcoin go down to like 28,800. China banned it. There was a string of bad news, and it came all the way back. And now in some parts there, they're allowing crypto again over there. So
Okay.
it's but the U.S. has been pretty clear, I think, with the
Hmm.
fact that they don't plan on banning it, but listen, they want to make their own stable coin. They
Yeah.
certainly, I mean, listen, it's pretty clear where a lot of the smartest minds are trying to innovate, as well as where a lot of the interest is. I don't see the U.S. banning it, but I do think that there's certainly going to be some more regulatory clarity down the line where they're going to do their best to make sure that you can't do some of these nefarious kind of like actions and stuff. But listen, let's face it. I mean, there's more crimes with cash than anything else,
Oh,
right?
yeah.
So
Yeah.
so you're never going to eliminate that, but
The lack of regulatory certainty, though, has certainly made it a lot easier for bad actors to proliferate the space. And that, I think, has definitely been changing this past year. You can look at some of the cases with the SEC. They've definitely been targeting some of these exchanges.
yeah, there's a really good point to make on that.
Hmm.
So a lot of people that aren't plugged in, that don't have a full understanding, they see things like what happened with FTX, and they say, "Oh, I told you crypto was a scam." And
Right.
here's an example that I like to give. Okay, if we were, let's say, using TD Ameritrade,
Hmm.
and all of a sudden, and I was buying shares of Apple with it, all of a sudden it was found out that TD Ameritrade, which is a marketplace, an exchange,
Hmm.
that they were misappropriating customer funds, and I lost all my money. Would I ever point the finger at Apple and say, "See, I told you Apple was a scam"?
No.
That's literally what people are doing with crypto. Now, don't get me wrong.
Right.
There's a high amount of cryptos that are scams and
Hmm.
rug pull type schemes. But if we're talking about quality here, let's just use Bitcoin for example. Yeah, there's nothing that has been ever proven that Bitcoin is a scam, but certainly, especially if you're doing overseas exchanges and such, there's no regulation there, and you
Hmm.
have people like Sam Bankman-Fried and FTX that can be bad actors, like you can have bad actors in anything, but it doesn't mean that the underlying securities are bad.
Right. That makes perfect sense. You mentioned the XRP case that had recently been was that in the Supreme Court?
Yeah, the SEC and so, and essentially it's like halfway done. Where like on an institutional side, they said it wasn't a security, but
Right.
it's coming on the retail side, and that was a big win for XRP. They kind of got, like, I think, wrongfully singled out, and you can go down some wormholes to see some of the potential reasons as to why, which is a little bit scary to see, but I think although there could be some painful regulation coming down, I think ultimately we're going to see more regulatory clarity. I don't think crypto is going anywhere. And I think the end goal of having the regulatory clarity is it's going to be a good thing, because you have so much institutions out there that would like to invest in crypto,
Right.
but literally can't because of their bylaws and because the lack of that regulatory clarity.
Yep.
I think a lot of companies out there would like to do what Elon Musk did, and use some of their cash and their treasury and invest in things like crypto, right? But a lot of companies literally just can't
Hmm.
because there's not that clarity there.
Well, that goes to my next question. Then is about the spot Bitcoin ETFs. Like we've seen, Kathy Woods, I think, is approved for one. Grayscale's approved for
Well, they're
one.
not
Or
they're not
not
approved.
approved. I'm sorry, is
Yeah.
applied. That's the
So
word I was looking for.
so here's the, I think, craziness out there.
Hmm.
You have the ability right now to buy a futures ETF,
Yes.
which a
Right.
futures ETF is riskier than a spot ETF.
Yeah.
Essentially, instead of it tracking exactly the underlying asset or being comprised of the underlying asset, it's comprised of like perpetual contracts that try to track the price of the underlying asset. So, why would you be allowed to have a futures ETF and not a spot ETF? It really makes no sense, in my opinion, but we're
Yeah.
starting to see movement there where you have BlackRock, Fidelity, Invesco, Franklin Templeton. I mean, you have ARK, Invest Kathy Wood. You have, a lot of
Mm-hmm.
these companies out there, which if you combine the assets under management, it's like 16 trillion across all of these companies that have applied for Bitcoin ETF. So why is this important? Because the majority of money out there is tied up in your traditional brokerages houses, and they are not going to go open a Coinbase account or a KuCoin account or an FTX, whatever it may be, and then go buy Bitcoin, try to take self-custody. The majority of people out there just aren't going to do that. But if I have the ability to buy Bitcoin like I can just buy a stock with
Mm-hmm.
my dollars I have in these, just like any other ETF out there, right? Like SPY or SPX, right? Then
Yeah.
think about, even if you get a small percentage of that money to come in, which would happen, then think about what that would do with the market cap and what that would do with the price. And I think that, you combine that, which by the way, the other one that we talked about was Grayscale, and Grayscale just had a pretty big win recently, where
Mm-hmm.
Grayscale, they got initially denied by the SEC. Grayscale has their Grayscale Bitcoin Trust, and what
Right.
they were trying to do is convert that into a spot ETF. So the SEC said no, but then a U.S. court overturned that decision and literally quoted the futures ETF, spot ETF argument. And now
Mm-hmm.
it's back in the SEC's court, where the SEC, has like 45 days. And the bottom line is that Q1 of 2024, you're going to see a lot of these final deadlines come in. So I think that that's going to be a very, very important time. And of course, shortly after that, you have the next halving of Bitcoin. And if you just look historically, listen, history, it doesn't always repeat itself, but it often rhymes. I mean,
Yep.
any asset where you cut the supply of market coming in half, you could just see a huge run up prior to and after the halving. So I'm
Mm-hmm.
extremely bullish based on all of these things we just talked about on Bitcoin. And then how about actual investor behavior? Something that's unique to crypto, because it's all on a blockchain, is that you can analyze that data. It's called on-chain analysis.
Right.
Yeah, and one of the things I like to look at is the supply of Bitcoin. So you have short-term holders, which are people that have either bought or sold or moved crypto in under 5.1 months or 155 days.
Mm-hmm.
And over that period of time, it's considered long-term holders. That's a very important distinction, because long-term holders have a much less propensity to sell their crypto after holding it that long.
Right.
Well, you are seeing supply of Bitcoin get locked up at record paces, meaning 75% of Bitcoin hasn't moved in over 5.1 months, meaning it's long-term holder supply. But
75%?
75%, it's somewhere between 65 and 70% hasn't moved in over a year. So why is that important? Well, take a look at a chart of what happened in Bitcoin over the last year. 60% is like 2 to 3 years. Okay. So
Right.
what's happened over that period of time? And they held through that, meaning they didn't sell it when you saw it go from 69 to 15. Do you think
Right.
that they're going to sell it if we see a little volatility here, or do you think they're holding on for higher prices? So you have all this supply getting locked up, but listen, there's still enough supply on the short term to move prices. But just think bigger picture. Spot ETF potentially approved over the next year. That's
Mm-hmm.
going to drive crazy demand. Record amounts of supply being locked up. The next halving next year with Bitcoin. Potentially some more regulatory clarity. There's even been some tax news that's come out where, kind of under the kind of hood a little bit, the Financial Accounting Standards Boards, the FASB, they approved a favorable crypto accounting law that allows firms to mark their holdings to current fair market value. So like mark to market here on their balance sheet. And
Okay.
this is something that allows another step to enabling like broad adoption of Bitcoin from corporations. I mean, Michael Saylor saw that news and he said, fair value accounting is coming to Bitcoin. This upgrade eliminates a major impediment to corporate adoption as a treasury asset. So listen, we're making the right steps,
Mm-hmm.
and I'm not here to make any price predictions, but I think that, I am extremely bullish over, let's say, the next 18 months in crypto. And listen, Bitcoin will rise all kind of ships here, the tide. But I think, like, if the safest one and my favorite truly decentralized one is Bitcoin. I think that it's very possible that over that period of time, you were going to see Bitcoin go well above six figures.
Wow.
And it just,
It's just everything's lining up.
yeah, I mean, it's simple supply and demand here, really. And
Well, you mentioned the just the ease of access to it being a huge factor, and I remember an earlier conversation from maybe a couple of years ago with I think it was Dr. Hans when he had mentioned when he was looking at different cryptos, like when they actually get listed on like something like Robinhood, like you can see the liquidity come into it as soon as that ease or that availability is made to the wider public.
oh, 100%. There's all kinds of people that try to do their best to do like a Coinbase IPO play or ICO play essentially.
Right.
So essentially they see that, oh, XYZ coin is going to be listed on Coinbase. Let's buy it, because a lot of times once it gets listed on a major exchange like that, it
Hmm.
makes it easier for people to buy, and it drives at least some temporary interest into the asset. So, but imagine now, something much bigger than that. You have the ability to
Imagine institutional investors getting involved in it, like you said. Yes.
institutional investors or individuals that have all kinds of trillions of dollars at your traditional brokerage houses, Goldman Sachs, whatever it may be, and now they don't have to go open a Coinbase account and try to mess around with that on their own. They can just, hey, you know what, financial advisor, give me some exposure to Bitcoin. And Bitcoin truly, here's my thoughts on it. I think if you love it, then
Hmm.
maybe have, like, I don't know, 10% allocated to it. If you hate it, allocate 5%. Okay,
Right.
because listen, I used to be a financial advisor at Morgan Stanley, and of course, one of the main things that you always try to discuss is having a diversified portfolio.
Hmm.
Well, that means an allocation of stocks, bonds, alternatives, real estate, and gold, right, and precious metals. And I think crypto needs to be a part of that. And you don't have to do too much. I'm not saying go take your life savings and put it in crypto, because it's extremely volatile. It's
Yeah.
certainly, if you're watching it every day and you're sitting through a drawdown, which it's not uncommon to see 80% or so or more drawdowns as you go through these 4-year cycles, it'll make you lose your hair.
Yeah.
But having some exposure and adding to it when you see prices are down and lowering your cost basis, and then remembering to pay yourself on the way up, because a lot of people forget that you're in this game
Yeah.
to make money. And I can't tell you how many people watch it go from 30 to
Well,
69,000,
well, I
and
think you
then
can. It's about 70%, right?
it'll go to, well, it'll go to, oh, once all the news stories start coming out where it's like
Yeah.
to 500K to a million,
That's when
that's
you sell.
actually probably a good time to sell, right? I mean,
Yeah.
there's some
Yeah.
very famous contrarian investors out there. You want to buy when there's blood in the streets. You want to be a buyer at the most pessimistic time, a
Yeah.
seller at the most optimistic time, right?
When your cab driver's telling you about how great an investment it is, that's when you get out.
Exactly, right? I mean, listen, Bitcoin was at, a little under 15K, and everybody was talking about the thing going to zero. They were talking
Yep.
about it going to 10K, to 7K, right? All the technical analysts coming out. It was a good time to buy, right? But it's very hard to time the market. So listen, if you dollar cost average, I think that's a great strategy, but
Hmm.
especially on times where you have price lower. But I think the whole crypto industry is extremely exciting, and blockchain technology, which is interesting. Blockchain technology is not that new, but now it's being applied to things that we're seeing in everyday life.
That's what's gotten me really excited. Like, can you imagine using that blockchain technology to like improve your supply chains or to use them for like contracts, like keeping them secure and like there's a lot of really cool stuff that can be done with that technology if it once it branches out or finds other use cases outside of crypto.
Yeah, and listen, this half hour went very quick,
I know it
but
does, doesn't
but
it?
but Kyle, unfortunately, I have a call in the back end of this, but really enjoyed speaking with you about this. I think we should, as things kind of envelop here and we get a little closer to that halving and maybe get some clarity on some of these spot ETFs and such, maybe we can have a follow up.
Oh, I'd love to do that. In fact, actually, I'm going to be spending some time at cryptocharge.com checking out the educational stuff you have on there, and I'm sure I'll have a list of questions for you after I finish doing that.
Well, that sounds great, brother. Again, team, it's cryptocharge.com. You can sign up for a trial or use code Habib, and you really get insights kind of like this every single day.
All right. Well, unfortunately, we have come to the end of our time with Dan here, but that's no reason to be sad because you can check out highway.ai. You can check out cryptocharge.com. You can find Dan on Instagram at the Dan Habib. So plenty of ways to get more information on what we've been talking about here today.
And just make sure you be careful. There's a lot of impersonators on
Oh, yeah.
social. It is the one with the blue verified check mark, because I can't tell you how many times I have people that I even know that are like, Dan, is this you? And it's somebody that, because of the nature of the things that I do, they try to pretend to be me. They'll make the profile look like it is. They change
Oh, yeah.
one little letter in the name, and then they're asking them to send them money to invest in crypto
Yeah.
for them. I've actually, sadly had some people send them money. So,
Oh, no. Never do that.
yeah. As a rule of thumb, never send money through social platforms.
Yes. All right. All those links will be in the episode description, so we'll make sure we have the right ones on there. Dan, thank you so much for stopping by. I know this was a quick chat, but hopefully we can do another one here in the future soon.
Would love that, Kyle. Thank you.
All right. Take care, everybody.
Two Bulls in a China Shop is an entertainment program, and all thoughts and opinions expressed in the show belong to the hosts and not of any company. They are not intended to provide specific advice or recommendations for any individual or on any specific security or investment product. It is only intended to provide entertainment about stocks and the financial industry of trading. If you make trades based on what you hear in this show, you assume all risks for those trades.